What's up guys, Kevin Cage here with another crypto update. In today's video, we're going to dive into the Ripple vs SEC lawsuit. Then I want to cover some XRP news and specifically talk about the power of DeFi and automated market makers coming to the XRP ledger. So first and foremost, we have shared by Panda Ripple XRP, a list of companies that have filed an amicus brief in support of Ripple. We've spent the bits. You can go to spendthebits.com to learn more. I'm sure you guys have seen Jay on the news before, essentially sending Bitcoin on top of the XRP ledger. This is a use case that has no affiliation with the company Ripple whatsoever. We have iRemit, a RippleNet user that uses XRP in payments today, and they have even said in their brief, we are not speculating on the price of XRP and we do not treat it as an investment, which is great. We have Crypto Council for Innovation, Investor Choice Advocates Network, the Blockchain Association, TapJets we've seen before. We have Coinbase, and are there going to be any other exchanges that are showing support of Ripple? Even if you don't like Ripple, even if you don't like XRP, if you are a crypto holder, you better be supporting Ripple in this case. Because if the SEC wins with all of this regulatory overreach, the United States is in huge trouble. And also Valhill Capital. And we have Moon Lambo and James Filan all over it just on Halloween. Now the 10th amicus brief in the SEC vs Ripple lawsuit has been filed. We even have Jake Chervinsky right here retweeting a tweet from Johnny Deaton, and he is definitely one of the biggest XRP haters that I've seen in this space, and now you can see that he is supporting Ripple vs the SEC. And let's be real, he most likely doesn't care about the company Ripple or XRP, but he cares about crypto. As you can see, he's an advisor on the Variant Fund, he's head of policy for the Blockchain Association, and he's also part of this board for the DeFi Education Fund. So he's always been a big fan of Bitcoin and Ethereum specifically and sees XRP as a threat. He goes on to say, it's rare in the world of SEC enforcement to see public outcry register on a federal court docket in the way we've seen from XRP holders since December 2020, and Johnny Deaton deserves a lot of credit for that, absolutely. So we have XLS20 going live. I can't even get on XRP right now because the website is just overloaded from everybody on this site. So, I mean, that's awesome. Congrats to everybody that was minting anything. I'm hoping to do it when it cools off later this week, so I'll keep you guys updated. Now, before getting into my next point in discussing automated market makers, also known as AMMs, and bringing DeFi to the XRP ledger, bringing additional liquidity between pairs, which could be huge for the future, and essentially making the XRP ledger a very competitive layer 1. Now, this was over a year ago by CoinDesk. Ripple, the company, is looking to build a market-making platform for XRP. Shortly after, Cointelegraph says automated market makers are dead. And now, as of today, November 2nd, we have shared by CoinDesk and Yahoo Finance, France, Switzerland, and Singapore. These three central banks are testing DeFi in the foreign exchange market, a multi-trillion-dollar market. And we can see automated market makers can become the basis for a new generation of financial infrastructure. With the Bank of International Settlements, the BIS, also known as the central bank of all central banks, and their innovation hub. And I believe the guy that's still ahead of it, Mr. Benoit Cœuré, French guy, I can never pronounce his name, but we have Project Mariana, looking at whether protocols used in intermediary-free DeFi can replace traditional, more laborious processes for matching buyers and sellers of different fiat currencies. So going forward, I want you to remember the central banks of France, Switzerland, and Singapore are attempting to automate foreign exchange markets using DeFi to cut the cost of cross-border payments, backed by the central bank of all central banks. Now to my next point, remember just a couple months ago, Ripple launches a crypto-enabled enterprise payments in Brazil, one of the BRICS nations, with TradingView Bank. This is the first bank in Latin America to utilize on-demand liquidity, or XRP, and also the first bank registered and approved by the Central Bank of Brazil, get this, to operate exclusively in the foreign exchange market by utilizing XRP. TradingView Bank is a 100% digital and 100% personal bank. We were the first exclusive FOREX bank approved and regulated by the Central Bank of Brazil, using XRP, focused on electronic FX transactions. Through the use of ODL, that's XRP, TradingView will deliver near instant settlement and access to liquidity 24/7, 365, not Monday through Friday. 24/7, crypto never sleeps. At launch, TradingView will support payments between Mexico and Brazil, with plans to support more corridors and use cases, including internal treasury and bulk SME payments. And there are several on-demand liquidity users today, companies that are using XRP for internal treasury purposes. This is what I recommend you guys read. You can just type in XLS30D, the automated market maker on the XRP ledger. So this is actually available right in GitHub. We can see the abstract right here with one of the authors being David Schwartz, CTO of Ripple, and one of the co-founders of the XRP ledger. This revision was back in June on the 30th. Now remember, the XRP ledger has always had a decentralized exchange, and that currently provides liquidity exclusively by manual market making in order books, keyword being manual market making. Now this proposal that David Schwartz is an author to adds non-custodial automated market makers as a native feature to the XRP ledger DEX in a way that provides increased returns to those who provide liquidity for the AMM and minimizes the risk of losses due to volatility. So they're proposing a new mechanism where the automated market maker instance continuously auctions off trading advantages to arbitrageurs, charging them and giving these earnings to its liquidity providers. This allows liquidity providers to take a larger share of profits that would normally be taken by arbitrageurs. So liquidity providers are going to be rewarded more than the arbitrageurs. Interesting. Now, a must-read thread is this, shared by Wrath Economan, a must-follow in the XRP community. This is a beautiful thread going over this XLS30D discussion for AMMs on the XRPL. And as he says, has enormous potential for the network. So we'll discuss yields, liquidity pools, and liquidity tokens. And I know many of you are already familiar with yield farming and liquidity pools and actually getting liquidity tokens and the risk of impermanent loss. And sometimes I don't do too much yield farming, to be honest, especially in a bear market. I would much rather just, focus on DCAing into assets that I feel like are lower rather than locking them up and then risking impermanent loss, especially now. But that's just me, guys, not financial advice. I'm still learning all of this stuff. And I would recommend some courses that I took for free online going over automated market makers and DeFi by Duke University and Buffalo. And that was on Coursera. And it helps you better understand DeFi as a whole. So this is an attempt to understand what Ripple's David Schwartz called the secret sauce of the XRP ledger automated market maker. So for those that provide liquidity to the network in different liquidity pairs, and you have these pooled tokens, you can also earn passive revenue for bringing that liquidity to the network. Automated market makers allow digital assets to be traded without permission and without traditional order books of buy and sell offers. Trading happens automatically using pools of available tokens called liquidity pools, or LPs. So liquidity pools, not limited partners. Users then supply liquidity pools with tokens held in pairs like you would find in a traditional order book, and then represented by a liquidity pool token. So for example, maybe you would put two equal amounts of XRP and USDC, the stablecoin, together as a pair. And once you do that, you would then get a liquidity pool token that represents this pool that you're providing to. And by supplying the pool, you then earn a small yield, because you're actually putting up your capital so that they can then use that liquidity and then you'll be rewarded. So on the XRP ledger, this would involve XRP and issued tokens, anything on the DEX. Okay, so maybe instead of a stablecoin, it would be XRP and any other issued token on top of the DEX. So let's switch that and just use that as the pair example. The price of these pooled tokens is mathematically determined and varies from prices on other exchanges, prompting arbitrage, which would be buying and selling on another exchange with a better price. So for example, if I'm buying XRP on Bitrue for 44 cents, and it's available on KuCoin for 40 cents, obviously the spread is not like that anymore, I would be buying on KuCoin for cheaper, bringing it to Bitrue, and then selling it for that profit, and just keep doing that until that spread in prices is gone, and just take advantage of that profit opportunity. So there are arbitrageurs in this market that do that in DeFi, not just CeFi, because I just named an example of exchanges. So there's people that go from pool to pool finding opportunity, and then they eat away the spread and get all the profits, and then they move to the next one. In the long run, arbitrage keeps prices everywhere near the same level. See, there's a method to the madness. It's bringing equilibrium. So of course, if you guys are familiar with Uniswap, a decentralized exchange on Ethereum to help swap all types of ERC20 tokens. But arbitrage has its own problems and risks. The XLS30D, I almost said 3D, discussion notes, they wait until the profit from the arbitrage transaction and thus the pool's expected loss exceeds the trading fees, all while racing against other people trying to do the same thing. So it seems like David and the other author are seeing problems in the current system and they're thinking about building a new solution on the XRP ledger. So once again, today, in the world of arbitrage, we can see in quotes, they wait until the profit from the arbitrage transaction exceeds the trading fees, all while racing against other people to do the same thing, waiting until they get a profit big enough to profit more than the trading fees they would incur. They would slow price discovery and reduce liquidity. So because of this, they're waiting until they can get a profit that is big enough to profit once you consider the trading fees that are incurred and that they're hit with. Then, because of all this waiting, they slow price discovery and reduce liquidity. Because there's more waiting, there's not tons of transactions, you're sitting on your hands and waiting to profit. There's less liquidity in the system. Therefore, there could be some spreads that exist, and price discovery takes a lot longer because everybody's waiting to profit. Does that make sense? Then they pull the tokens out to sell them at the liquidity pool's expense. What can be done about this? Damn, David Schwartz is just too smart. In this video, Ripple's David Schwartz shared the XLS30D proposal has a secret sauce that allows those who supply liquidity to take a large share of profits that would normally go to the arbitragers. And remember, David Schwartz spoke at this. You can actually go on YouTube and type in David Schwartz XLS30D. And I believe he spoke at this at the Apex event just a couple months back. Maybe it was last month. And that's why he was talking about the XRP ledger actually becoming a serious contender in the layer 1 space. So Roth IRA also sharing this as well right on GitHub, so highly recommend checking this out. Super interesting. It goes super deep, guys. I don't want this to be too dry. All in all, this is an amazing thread put together by Roth IRA, and he finishes saying, the idea is that the XRP ledger automated market maker makes arbitrage faster with less risk while increasing the profits for liquidity providers, those of us that are actually putting up our money, all while increasing liquidity in the system overall. So what does this mean? This means wins for everybody. As we know, the more liquid XRP is, the larger the transactions become that XRP is able to send because of that liquidity. Okay, now back to some research. Here is a Bank of International Settlements report. We did discuss this. France, Singapore, and Switzerland. Remember that Singapore and Switzerland already have regulatory clarity for XRP. And the Central Bank of France, the central bank, has XRP in their documents before. And we've gone over that years ago. I know King Solomon shared it. Man, was it like 2019 or was it 2020? Anyways, that's stuff that we talked about a long time ago. Looking at DeFi protocols and central bank digital currency trading. Remember these countries: France, Singapore, Switzerland. And remember, last month, Ripple builds new partnerships in France and Sweden despite the crypto bear market, with Paris-based Lemonway and of course the Swedish money transfer provider XBot, directly connecting them to Southeast Asia, and you could argue that Singapore has ties there. I know the Thai baht is the native currency, but understand that Singapore is one of the biggest, most wealthy countries in all of Southeast Asia. Don't think it's a coincidence that these three are being published by the Bank of International Settlements, looking at exactly what Ripple was just talking about, and David Schwartz talking about this exact thing with automated market makers, and then tying it to TravelX, which is the only registered bank that is using XRP in the foreign exchange market. And meanwhile, we're going to finish up with this because this is funny. Gary Gensler, the SEC chair, has the audacity to say this on Halloween. Happy 14th birthday to Satoshi Nakamoto's white paper. It has led to innovation in crypto asset investing. Let's make sure as crypto enters its 15th year that investors get proper protection. Johnny Deaton, quit acting like you wouldn't hand Satoshi a subpoena if you could. Thanks, Gare Bear. We feel so protected. If you enjoyed this video, I'd greatly appreciate hitting the like button and subscribing. Let me know your thoughts down below. And as always, my link tree is linked right in the top of this YouTube video description with all links, crypto resources, and discounts. I'll catch you in the next one.